Hey guys, this is Lisa Church, and I have a few tax tips for you today. I'm recording this on a very snowy Sunday in Maryland. It's January 13th, 2019, and you're hopefully listening to it in time to take advantage of the first tip, which is don't miss your last quarterly tax payment that's due on January 15th. If you're making quarterly estimated tax payments to the IRS, the due date for the fourth quarter of 2018, which covers September 1st through December 31st, is January 15th, 2019. For payments made using IRS Direct Pay, you can make payments until 8 p.m. Eastern Time, and this is free since you're paying by an ACH debit from your bank account. If you'd prefer to make your payment using a credit or a debit card, your payments can be made up until midnight of January 15th, but there is a fee of around 2% depending upon which payment processor you choose. The website I've given you, irs.gov/payments, will give you more details for both types of payments. I've also given you notes about the due date if it falls on a Saturday, Sunday, or a legal holiday, but January 15th this year is on a Tuesday, and it's definitely not a holiday. The next tip is for those of you with employers who offer a flex spending account, or an FSA. If you had difficulty using up the funds in your medical flexible spending account, your FSA, before the end of the year, most employers offer an FSA Grace Period or a $500 carryover that gives you some relief from the use it or lose it rule that comes with an FSA. Under IRS regulations, employers that offer FSA plans can offer one, but not both, of the following options for unused FSA funds. First, there's a 2.5-month grace period, which means that you'll have until March 15th of 2019 to use up your 2018 FSA funds. Or the next option is a carryover of up to $500 of your 2018 FSA funds into your 2019 FSA. The carried over amount won't count towards your maximum allowed contribution for 2019, and it can be spent anytime during 2019. Please be sure to check with your employer first, though, since the law doesn't require them to offer either of these options. Last but not least, we've got a mileage rate increase. Starting on January 1st, 2019, the standard mileage rates for the use of a car, van, pickup, or even a panel truck will be 58 cents for every mile of business travel that you drive. This is a 3.5-cent increase from the 2018 rate. And then we get 20 cents per mile driven for medical or moving purposes, which gives us a 2-cent increase from the 2018 rate. If you're driving for a charitable organization, that remains at 14 cents per mile. You also have the option of using actual costs of operating your vehicle instead of the above standard mileage rates. Unless you have a vehicle that's expensive to operate, though, like an older one on which you're making lots of repairs or a gas guzzler, then you're generally better off just sticking to the standard mileage rate. Your tax pro can run both of those scenarios for you to see which one helps you the most. Speaking of tax pro, I've given you my contact information on this last slide, and we'd be more than happy to help you with your tax issues. My practice is in Severn, Maryland, but I work with taxpayers from all over with tax planning and preparation, as well as tax resolution. I also serve as an outsourced CFO for business owners who'd rather focus on making money rather than tracking it. Just call or email me to make an appointment so that you can stop worrying about your tax issues and start doing something productive, like growing your business. Stay safe, stay warm, and get out there and enjoy that snow.